There's more evidence today of a slowdown in UK house prices, according to the Halifax House Price Index out today. It fell by a margin of 0.4% in October, month on month. It was the second month in a row where there was an easing in prices across the UK, taking the monthly drop to the lowest since June 2021. Last month, in September, the Halifax said that house prices fell marginally, down by a margin of 0.1%, as the market displayed further signs of a slowdown. Much of this has a lot to do with affordability. Affordability is all about how much people have to pay for mortgages against what they can afford in terms of their wages. Let's take a look at what's happened with sterling. It's a well-trodden path now about the way in which this has all been reported, with this drop for sterling down to the 103.30 level during the darkest days of the last government, where we saw Kwasi Kwarteng's fiscal statement wanting to try and find ways of trying to boost the economy and failing spectacularly. We have since seen a recovery for sterling. In today's trade, we got sterling down from the highs that we had on Friday. That high we had on Friday was boosted by the weakening US dollar. So much of what's happening for sterling is all about the dollar. But in today's session, this pullback in housing market really does display the frailties, I think, within the house price of the property sector particularly, and house prices and the way that house prices seem to be moving at the moment. And there's a lot of speculation that we could well see further lower low prints for these house price indices, not just from the Halifax, but also from the nationwide. So that could add extra pressure to sterling.